Case 3. An accounting policy decision.
Assalamualaikum warahmatullahi wabarakatuh and a very good day. My name is Ummi Syakira Binti Muhammad Suleh and my Matric number is 264640. In this video, I would like to explain about case 3 and accounting policy decision. In this case, involve the argument between two companies which are the UPC Berhad as the parent of the company and MIM Holding Berhad as the subsidiary. The subsidiary is the special private entity company. The main problem in this case was faced by MIM Holding Berhad is about the injection of fund. The accountant of MIM Holding Berhad, Aina, is confusing whether she need to recognize the fund as equity or liability in the financial statement due to some argument. This issue was stemmed from an investment decision made by MIM in late 2017. The parent of the company, UPC Berhad, had contribute the initial funding for the investment at amount 18 million. In the beginning perspective of view by MIM Holding Berhad, they look the injection of fund as usual additional capital funding by the parent. It is because this is not the first time that the parent make investment and the investment made was exacted by the parent. However, in 2018, during the convene of accountant, the recognition of fund was resurfaced and starting to bite. Causes of problem. This problem was driven due to some causes. One of the root causes is because the different opinions and views by external auditor of parent and its subsidiary. External auditor for UPC, which is GA and Associates, state that MIM Berhad should recognize the fund as debt because it looked, smelled, and felt like debt. MIM should pay back the 18 million to UPC Berhad as it was the obligation for the company. Therefore, the board of directors UPC Berhad said they are only willing to offer a short-term financing arrangement to MIM. Meanwhile, the external auditor MIM, MJ and Associates said that it should be recognized as equity since the UPC is the parent of MIM. The other causes is about the power control over the subsidiary. According to MFRS 10, the parent had power and involvement over the subsidiary. In that case, UPC Berhad aggressively pushed for MIM to snap the investment because the selling was attractive as it below the fair value. As the investment is to generate parents' income, UPC should give the funding to the subsidiary without payback. The third causes why this issue came out is because of MIM Holding going concern and solvency priority. The external auditor are very dark with the going concern of MIM Holding after analyze the financial statement and worry about its sustainability. External auditor also look the ability of MIM being whether they able to continue meet its debt when the debt become due. The debt that required to pay was getting increased if the fund was recognized as debt. The last causes is about the internal control mechanism of the company, which is the internal controls was very low. There are none of external audit report over the period of 2017 to 2019 that indicate any emphasis on internal control, and the management also not put the actual implementation toward the employee.
Decision criteria and alternative solutions.
The first alternative solution is if the company recognizes the injection of fund as liability or debt. The first point is the consideration of company solvency. This thing is to know whether the company is able to pay the debt on time. I am analyzed two categories of ratio, which is debt to equity ratio and current ratio. Debt to equity ratio reflects the ability of shareholder equity to cover all the outstanding debt in the event of the business. The current ratio is to analyze the company's ability to pay short-term obligation within 1 year. For the calculation, I was include the amount of 80 million in liability pride. Based on the ratio, I analyzed that debt to equity ratio show the bad result as the finance is for short term. They cannot sustain the abilities of pay debt, although MIM Holding get the return for the investment. The higher result show the higher risk situation for the company. Look in year 2017 before restate financial statement, the debt equity was 1.24. However, after restate the financial statement and take calculation of 80 million, the result was increased to 2.82, which is it showed that company indicate more debt than equity. For the current ratio, it also showed a bad result for short-term financing as the result was decreased. Look in year before restate, the current ratio was at 1.33. However, after that calculation of 18 million, the result was decreased to 0.86, where it showed the ability of company to pay their liability using cash is very low. The second consideration is about going concern of the company. The MIM Holding not only recognized the additional liability of 80 million, but also the Islamic banking loan at amount of 40 million. If you look back at the consolidated financial statement, the amount of borrowing are increased for each year. Hence, MIM Holding required to pay dividend for the share for each year. Furthermore, MIM Holding was give part of their revenue to the parent company as it was the obligation for MIM. The revenue that is set by the parent is average not less than 50% each year. For the second alternative solution is when the company recognizes the fund as equity. For the calculation, I was include the amount of 80 million in equity part. I also use the same ratio as the fund in debt. Based on the ratio, I analyzed that debt to equity ratio showed the better result compared when it recognized the fund under debt. Although the result of year 2017 restate is increased, but the increasement of result is under the control. The increasing is not much as recognized as debt. The result is 1.40 from 1.24. For the current ratio, it showed the increasement in year 2017 restate from the previous. It showed that the company able to pay back the debt using the current asset is high. For the second point is about going concern consideration. MIM Holding should only pay the Islamic loan at 40 million with the interest. Therefore, it can reduce the amount of paying borrowing of MIM Holding company. In addition, MIM Holding can require the 80 million under additional capital and it increase the asset of the company and it help the going concern of the company in future.
Recommended solution, implementation, and justification.
As for the recommendation, MIM Holding should recognize the injection of fund of 80 million as the equity to keep the going concern and solvency of the company. It is because the company will face less burden of payment debt in the future. Furthermore, the both of the parent and subsidiary didn't have any agreement for the funding issue. Hence, when the investment was made, MIM Holding do not have sufficient free cash flow to be divested into cost of acquisition. In other part, as the parent of the company, UPC should give the fund to a subsidiary as the function of subsidiary is to generate the income for parent. At the last, for equity, the injection of fund affect MIM had paid the financial statement of MIM Holding become rosier.